Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the breakout attempt above the 04 quarter resistance level ended up failing, and so far the market has been very balanced. We got responsive sellers active above 04 quarter for a move down into the 96 half to 98 half pre-market support, which essentially points out the intraday balance breakout area from yesterday. So above pre-market support, we know that the buy side is a bit more dominant. Bigger picture, we know that ES is trading near some key resistance, and that makes it a bit risky to initiate new longs at these higher prices unless you're getting a lot of underlying momentum and you're seeing broad market strength. It's going to be risky to initiate a new long up here, and there's actually still potential for sellers to be active here at 02 half and the 03 quarter to 05 quarter initial resistance zone for a move down into pre-market support. Now, in order for the sell side to take over, at least in the short term, we'll need to see a break of 96 half to 98 half. If the market can break that zone, then there's potential to go down into the 86 quarter, 88 quarter initial support, potentially the 84.75 support level where responsive buyers can still be active on first test. And in order to really break below that, we're going to have to see some very strong selling. We're going to need to see some strong downside momentum on the NYC tick and broad market weakness on the advanced decline. Without that, the market can continue to kind of chop and bounce in a range. We are on the last day of the trading month, the last day of the week, heading into the weekend, so the market can be a bit more choppy than usual here. On the upside, if the market can hold above the 02 half prior VPOC and then from there above the 04 quarter high from the last couple of sessions, then there's potential for some continuation higher because that would tell us that the breakout that we're seeing is actually sticking, and that would bring the overnight high and the 0875 to 1075 zone into play. Now, if we're going up on strong momentum, then that 0875 to 1075 area may not really produce much of a reaction, and at that point, the 13 half to 15 half area is really going to be the key inflection point. So you can see that the way the market context is set up right now, the market can really tip in either direction. It can go up to the 13 half to 15 half. It can go down to 86 quarter, 88 quarter, and both scenarios are equally likely. What we also know is that, short term, the buyers have been dominant. Bigger picture, there's still that negative divergence between the S&P and the Russell. So if you're watching TF, then also look for some buying coming into that market. Without the Russell participating, it's just going to be very challenging for the ES to continue going higher. So it is a bit of a riskier market, I think, today to trade just because of where the market's trading in the overall, grand scheme of where the prices have been, what we've seen over the last few weeks. So it just makes it a bit riskier because if you're taking a long because the buyers are dominant, you're definitely not getting ideal location. You're having to take it at a very aggressive price, and the only time it makes sense to do that is when you have strong underlying momentum, broad market momentum supporting that idea because it's purely a momentum trade. It's not a value trade. Whereas if you're buying a pullback, that's more like buying a pullback into value into an area of some previous demand. But when you're buying it up here, let's say 03 to 05, it's not a value play, it's a momentum play. And if you don't get that continued underlying momentum, then it's going to be better to get out of that trade and look for the next one. And by the same token, if you are not seeing that strong upside momentum, or at least the tick spending more time above zero, kind of a more positive skew on the tick, then any breakout attempts that take place are going to be more prone to failure. Now, it doesn't mean that they have to fail. It's just that without that underlying momentum, it's going to be riskier, right? So keep that stuff in mind. Be selective. Focus on the quality setups. Last day of the month, last day of the week. There's no reason to be overly aggressive. There have been a lot of very nice setups earlier in the week, and now heading into Friday, it's better to be very selective. Focus on just one or two ideal setups. If you're not getting good location, if the market read is very mixed, where it's too choppy, there's really no side purely in control, there's no momentum, then it's better to sit out rather than jump in at a very unfavorable price where you're not really going to be able to hold that trade or see it through. So, be selective today. If you miss a trade, it's okay. Given where the market's trading right now, it is a higher risk area to be trading. So keep those ideas in mind. Let's see where ES trades off the open in relation to the O2 half, prior VPOC, and the O3 quarter to O5 quarter zone. Above it, buyers in control. Below it, the sell side can step in and use that to establish the intraday bias, and then we'll just take it from there.